I mean, when we look at inflation, which is really what's driving Fed policy, all the fundamentals to us point toward upside risk to inflation. You have above trend GDP growth. We have a labor market we think is heating up. We have a range of supply side challenges, energy, but also in trade, labor, all these things where you think are going to keep inflation elevated and the Fed hawkish.
I've quoted Orszag and Posen, I think it was out in January, maybe my note of the year, but they are with you looking for sustained lift. Is it because of labor market pulling in to the Orszag Posen wage growth that gets us there?
That is part of it. You know, one of the most concerning parts of inflation are what we're seeing in non-shelter services. That's the majority of core PCE, which is what the Fed's looking at. And that's running at high levels, shown no progress over the last year. And we think the labor market is tightening. Wage growth is going to feel upside pressure. That's going to put more pressure on those sticky inflation numbers. That's why I think some Fed officials are starting to talk about, with the backdrop that we have now, we can't be confident we're going to trend back to a 2.0% inflation rate, more like the mid twos maybe or high twos. But we need some rate hikes here, do we think, to bring inflation back to target.
So last week's soft CPI and to a lesser extent PPI data, was that more a function of energy prices coming down during the initial days of kind of this memorandum of understanding kind of thing?
Yeah, I mean, energy prices were a big part of it. I mean, admittedly, that report was much softer than we were expecting. It looks very unusual. You know, there were some big downside movers that month. If you look at something like the Cleveland Fed's median CPI, that was up closer to 20 basis point month over month. You know, core CPI fell in the official reports. That's a bit odd historically. We don't think it's going to repeat. We think it's more of an anomaly. And we're looking for firmer inflation numbers the next few months. Now, if we get a few more months of very soft numbers, we'll have to reconsider our Fed call. But we think it's an anomaly, not the new rule.
You mentioned that labor market's heating up. What is your view of the U.S. labor market here? It feels like we've been at and continue to be pretty darn close to full employment here.
Yeah, I mean, we're looking at payrolls growth over the last few months. You know, we had some downward revisions, a downside miss a bit in the last report, but we're running over 100,000 jobs per month. We think that's well above the break-even rate to keep the unemployment rate constant, given that we're having no or very weak labor supply growth. And that's putting downward pressure on the unemployment rate. I think companies, that's very consistent with the above trend GDP growth that we're seeing this year.
How do your managers respond to the prima donna who walks in the room and says 3 rate increases, which is price down, yield up?
I think, you know, we have we have a lot of debates at work, but pretty broad support.
You and Greg Peters are going at it.
Yeah, we have pretty great debates, but I think we're aligned on this view that when you look at inflation over the last several years, you see that's been well above target, and these fundamental drivers are going to keep it there. And when we hear from Chairman Warsh, but the broader Fed, they all sound quite hawkish. Even after that soft June CPI, you know, the tone across the board, we think, is reaching a hawkish critical mass. And that's another way of saying we think the bar for rate hikes is relatively low, and it's only going to take, you know, somewhat firmer inflation data to get them to move.
Do you think what do you take away from Chairman Warsh's comments that we've had? He spoke in Portugal. He had his one Fed meeting. Can he really go on a rate hiking policy here, given maybe some of the political pressures he has?
Well, you know, I would say two things. One, you know, my number one takeaway from all of Chairman Warsh's comments so far is this idea of getting inflation back to 2.0% without rounding, not in the vicinity of target, but getting inflation back down to target. And that is why, you know, major reason we think they're going to hike rates. Now, on the political front, you know, remarkably calm there so far. We haven't seen much response from the administration. And you know, everything that we're seeing and hearing is that A, Warsh is going to be independent, and B, you know, that the administration doesn't seem too perturbed with his communication so far, which has been quite hawkish.
Yep.